Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody. Hope you're having an absolutely amazing morning. It is our daily market commentary. This one is only going up on TradersArmy.com today. For our Traders Army subscribers, I wanted to make sure that not a whole lot has changed from when we did our live trade room last night, but I did want to talk about a few things, so I thought it would be worth bringing up. So first of all, in our live trade room last night, we had taken a look at this hourly candlestick, candle-to-candle trade, and this is why we do candle-to-candle, because what it does, it oftentimes allows you to enter into a trade, dip your toe in the water without taking too much risk. So we were looking at this one candle here and getting short below it. If you notice, your stop moves to the high. We started with our stop up here, moves to here, moves to here, moves to here, moves to here. Notice that where our stop is exactly where the entrance to the position would be. So that's the purpose of candle to candle. It allows you to take a flyer on not great quality positions. Now, I'd said that if we found things that are worth doing, then we'll take a look at our daily market commentary, adding to what we talked about last night. And really, I just see one or two levels somewhere up in here that might be worth adding. We spoke about this wick over wick, and it wasn't a great level as of yesterday. So I don't necessarily want to add anything to this point as far as new levels or new zones. When I go to a 15-minute chart, we reversed it right around the 10 o'clock, 11 o'clock in the evening is when we started to kind of pick up. So it was before the European market opened. So I don't really have any strong levels to lean on. And I feel like I would just be forcing it to add some of those levels in here today. Same thing with the NASDAQ. I feel like I would just be forcing it. So we may look later today for candle-to-candle potentials. Now, we did wind up basing before the level here in crude oil, got a little bit of a pop, and it popped right to just a little bit below this opposing area here. I was looking at 57.10, I think, for that first little level, and now we've kind of pulled back down. So I would say at this point, if you got in on the breakout, your stop would still be below here. You're certainly not completely stopped out of it yet, but we're not getting much movement, right? 1, 2, 3, 4. We're at 5 candlesticks. So our stop should basically be at move to break even at this point. And it may that may kick you out of the position. I think still that there's room for price to make it up to here, and this could actually still be a good area of demand for a reversal. So just keep an eye on this area heading into the rest of the day for price to continue to move. Other than that, looking at what we talked about last night, if you were in the session last night, then not a whole lot has been added. Overall, it was a pretty good session last night. The euro did come down overnight, still chopping around in front of our level. Canadian dollar came back through this area. This is why I said I wouldn't go long on it if we came back. This is the one that we said we left this on the chart. It came through here. That was the confirmation entry on Friday, but still in play. Nothing else has really changed. So I'm not going to talk too long on today's DMC. I just wanted to at least introduce some of the areas that we were looking at for today. So make sure you keep an eye on the trade feed updates today, as those trade feed updates will help you to make sure that you're on the right side of some of those positions as we move and adjust. And we may dive into some of these levels later on in the day, depending on what the market gives us. If you guys have any questions, make sure you reach out to Mike or myself, support@tradersarmy.com. I will see you tomorrow with a DMC. Later.